Welcome back to the deep dive. We're shifting gears a little bit today.
Just a bit.
Usually we take that wide angle lens, right? We're looking at a whole industry from like 30,000 feet. But today we're landing the plane.
We're zooming all the way in.
All the way, we are focusing on a single address, a single deal, and we're going to use it as a lens to understand really the entire San Diego real estate market right now.
It sounds micro, I know, but when you really look at this specific property, it tells a massive story about where the market is actually going.
Exactly. And before we get into the weeds, I just want to set the stage. This deep analysis of market conditions and, property-specific data is brought to you by United Home Teams.
And this is important.
It is because this isn't just theory. We are talking about a property, 8324 Calle Calzada, where the team at United Home Teams actually just helped an investor client secure the deal. They just opened escrow.
That's a huge distinction. I mean, we're not just scrolling through Zillow and guessing here. We are looking at a deal that's happening, in real time. We're dissecting a live financial vehicle.
Right. Our mission today is to give you that firsthand market analysis so you can see the board the way the pros see it. We want to show you why this specific house was the right move.
At the right time. And honestly, looking at the data for 8324 Calle Calzada, just a fascinating case study.
Okay, so let's introduce the star of the show. We are in San Diego, zip code 92126, Mira Mesa.
Yep.
Now, for anyone who knows San Diego, Mira Mesa has a certain reputation, right? Historically, it's been these affordable post-war tract homes. Very standard stuff.
Very consistent neighborhoods.
But you've called this specific property a unicorn.
I did, and I don't use that word lightly, especially not in a neighborhood that's as uniform as Mira Mesa can be.
That is a bold claim. So let's test it. We're going to break this down, the property itself, the investment math, and then the bigger market picture.
Sounds good.
Let's start with the house. I'm looking at the spec sheet. 4 beds, 3 bath, listed at 1.185 million. On paper, that sounds nice, but maybe not unique. What is jumping out at you?
Okay, the first thing that just hits you, and you can't ignore it, is the sheer volume, the size. This home is 2,324 square feet.
Okay, so help me contextualize that. I mean, for Mira Mesa specifically, is that an outlier?
It is a massive outlier. You got to remember, a lot of that area was built out in the 70s and 80s. The standard footprint there is usually, 1,200, maybe 1,500 square feet.
Oh, wow.
Finding anything over 2,000 square feet in this specific pocket, it's incredibly rare. It's like finding a needle in a haystack.
So we are talking almost double the size of some of the original homes there.
Pretty close to it. And this is where the comparison gets really interesting. If you look at the comps, right, the other sales in the area, there's a property nearby on Hydra Lane, 8633 Hydra.
Okay, I see that one.
It sold recently for about $1.18 million.
The same price.
Virtually the same price as our house on Calle Calzada. But here's the kicker. That house on Hydra Lane, it was only 1,405 square feet.
Right, wait, hold on. So let me get this straight. It's sold for the same price, but it's almost 1,000 square feet smaller.
Correct. You're paying the same amount of money for vastly less house. Or, look at another one. A283 Calle Calzada, literally down the street. It sold a bit ago. 1,627 square feet.
Huh.
So when United Home Teams flagged this for their client, the value proposition was immediate. You're not just buying a Mira Mesa home. You're buying bulk square footage in a neighborhood where space is the absolute scarcest resource.
That brings me to the layout because, you can have a big house that's designed poorly, but I'm seeing a phrase here in the notes, dual master bedrooms.
That is the aha moment for this property. That's it.
One downstairs and one upstairs. Why is that specific layout so powerful right now?
Well, think about how people are living. We're seeing this massive rise in multi-generational households, right?
Sure, with aging parents.
Exactly. Maybe you have parents moving in. They need a primary suite on the ground floor because they can't do stairs. This house solves that instantly. Full suite, full bath, downstairs.
And there's still a master upstairs.
Yes, and it's a luxurious one. The notes talk about a private balcony, a spa-like bathroom. So if you're an investor, which is the lens we're using today, this layout is just gold.
Okay.
You aren't limited to just a standard family. You could target a really high-end roommate situation.
Like what, for example?
Imagine two tech professionals. Maybe they work at Qualcomm right there in Sorrento Valley. They can split the house and both of them get a true master experience. Nobody's stuck with a tiny kid's room and the hall bath.
That's a really smart angle. It basically allows for two heads of household under one roof.
It drives demand way, way up compared to the standard tract home next door. Your pool of potential tenants just exploded.
Okay, we have to talk about condition because often when I see a house this big in an older area, it's a fixer.
Right, a Frankenstein house.
Exactly. Someone tacked on a weird addition in 1990 and now the roof leaks. Is that what we're looking at here?
Not at all. And this is so key for an investor who wants to move fast. The sources all say it's move-in ready. It's turnkey.
So recently updated.
Extensively refreshed over the last 3 years. New exterior paint, totally upgraded kitchen. We're talking quartz countertops, custom cabinets, new flooring. It's done,
I did notice the description said open kitchen flowing into a casual family area.
which is what everyone wants, that great room feel. But, and this is why the size matters, it also has a separate formal living room with a fireplace.
So you get both.
In a smaller house, you have to choose. Here you get both. For a home that was originally built in 1971, it feels incredibly contemporary.
And for an investor, buying turnkey means you're not burning cash for 3 months dealing with contractors.
No holding costs. You can get a tenant in on day one.
Okay, so we've established the what. It's big, flexible layout, totally renovated. Now I want to pivot to the why. Let's talk money.
The fun part.
You said the list price was $1,185,000. United Home Teams just got it into escrow. Let's look at the math underneath. The big metric here has to be price per Stevie foot.
This is the great equalizer in real estate. It just cuts through all the noise.
So hit me with the math.
Okay. You take the 1,185,000 divided by the 2,324 square feet, and you are paying roughly $510 per square foot.
Is that, I feel like in San Diego, seeing anything near $500 a foot is basically a fossil these days?
It is incredibly low. For a renovated product in 2026, it's almost unheard of. Let's go back to that Hydra Lane house we mentioned.
The smaller ones.
The smaller one that sold for the same price, because it was only 1,400 square feet, the price per square foot was, well, it's through the roof. You're talking well over $800 a foot.
That is a massive gap. So you're paying 510 while your comp is paying 800.
Now, generally, smaller homes do trade at a premium per foot. That's a market rule. But this gap is much wider than usual. I mean, even the algorithms, like the Redfin estimate, they have this home valued around $1.24 million.
So buying at 1.185 feels like you're capturing equity on day one.
You're buying wholesale, effectively. And if values in the area keep going up, that gap between your purchase price per foot and the neighborhood average, it creates a safety buffer.
Right.
If the market goes up, you win big. If it stays flat, you're still fine because you bought in at a lower basis.
Speaking of safety buffers, let's talk cash flow. If I'm an investor, I'm asking, okay, that's great, but can I actually rent this thing out?
Most important question.
And there was a number in the rental history source that honestly made me do a double take. I thought it was a typo.
You saw the January listing.
I did. It was listed for rent in January 2026 for, what was the number?
$5,900 a month.
$5,900 in Mira Mesa. I have to play devil's advocate. That sounds astronomical.
It sounds high, especially when you look at the Zillow rental data for 9/1/26. The average rent there is sitting around like $2,900 to $3,090.
Okay, so this house is supposed to command almost double the average. How is that sustainable? Who pays that?
This brings us back to what I call an asset class conversation. When you see average rent on Zillow, it's just matching everything together: studio apartments, old condos, unrenovated little houses.
So the average is dragging the perception way down.
Precisely. This Calle Calzada house, it's a 4-bed, 3-bath, 2,300 square foot executive home. There is a severe scarcity of high-end rentals in this specific zip code. And you have to think about the location. You're right next to Sorrento Mesa.
The tech hub, Qualcomm, the whole biotech corridor.
Exactly. If you're a corporate exec or a senior engineer moving to San Diego for a job there, you don't want a fixer-upper. You don't want a noisy apartment. You want a turnkey luxury experience near the office. You have the $6,000 a month budget, but you don't have the inventory to choose from.
Because almost nobody is renting out homes this nice.
Right. Most of the rentals are just basic. When a unicorn like Calle Calzada hits the rental market, you grab it.
So the $5,900 price tag isn't a fluke. It's actually proof that this house operates in a different tier from the rest of the neighborhood.
It validates the entire thesis. It proves the utility value of this specific property is way higher than the median home. And that high rent, it covers a huge chunk of the mortgage, which just reduces the investor's risk.
That's a crucial point. Okay, the house is a winner. The numbers work. But real estate is never just the four walls.
Never. It's context.
We have to zoom out to 92126. What's happening in Mira Mesa? Because I see mixed signals in the headlines. Some say the market's cooling, some say it's on fire. Which is it?
It's confusing, right? And this is where you have to really dig into the data. If you look at Zillow's general home value index for the zip code, It shows values are actually down about 4.8% year over year.
See, that's a flashing red light for an investor. Why would I buy in a falling market?
But you have to dig deeper. This is where aggregate data can lie to you. Zillow is lumping in condos and townhomes, which had a softer year.
Okay.
But if we look at the standout, the San Diego Association of Realtors report, and we filter only for detached homes, the story completely flips upside down.
What does the detached data say?
The median sales price for detached homes in 90/21/26 is $1,185,665, and that number is up 15% year over year.
Hold on. 15% appreciation in 1 year. That's not cooling, that's booming.
It is a very, very strong seller's market for single-family homes. And here's the craziest part. The median price is $1.185 million. The list price of our property on Calle Calzada, $1.185 million.
It's priced exactly at the median, down to the dollar almost.
Exactly. But, and this is the key takeaway for you listening, for that median price, you are getting a home that is statistically much larger and much more updated than the actual median home.
You are buying a superior asset at the average price.
That is the investment gold right there. You're not paying a premium for the premium features, you're paying market rate for an above-market asset.
And what about inventory? Are there a lot of these homes just sitting around?
Not at all. We are at a serious inventory crunch. The SDA report shows that while inventory has technically jumped, it's up about 71% from last year. We're starting from such a low base that it doesn't really matter. There were only about 36 active listings in the whole zip code in December.
36 homes for thousands of buyers.
Right, we use a metric called month supply of inventory. Basically, how long would it take to sell everything currently for sale?
And what's the number?
It is sitting at 1.9 months.
Okay, for those who don't speak realtor, translate that.
In real estate, anything under 3 months is a strong seller's market. 6 months is balanced. We are nowhere near balanced. At 1.9 months, buyers are still fighting over scraps. It's why homes go pending in 30 or 40 days.
So despite any confusing headlines, the supply and demand curve is still heavily, heavily tilted in the seller's favor.
Heavily. And that creates a price floor. It's really hard for prices to drop when there's literally nothing else to buy.
Let's touch on lifestyle real quick, because even if the numbers work, people have to want to live there. What's the vibe on that street?
It's a quiet street. The listing mentions a sunny front yard. It's not a main artery, so it has an exclusive feel. But the big draw for families, and really for resale value, is the schools.
Mira Mesa has always been pretty solid for schools.
Very solid. You've got Sandberg Elementary, which is a 7 out of 10, less than half a mile away. And Mira Mesa High is a 9 out of 10. That 9 out of 10 rating is a huge anchor for property values.
Sure is.
Even if your buyer doesn't have kids, they know their future buyer will care about that.
And walkability.
It's low. Let's be honest, it's a car-dependent suburb. The walk score shows that. But in San Diego, we often trade walkability for accessibility. And you're right next to the freeway. If you commute to Sorrento Valley, you're at work in 10 minutes. It's strategic.
Okay, we've covered a lot. The unique layout, the price per square foot value, the insane rent history, the macro data. It's time to synthesize. Let's put a bow on it. Why was this such a solid move for the investor?
It comes down to 4 pillars. If you're taking notes, you should write these down.
Go for it.
First is scarcity. You simply cannot easily find 2,300 plus square feet in Mira Mesa. It just doesn't exist in volume. When you own the rare asset, you have pricing power.
Supply and demand. You own the supply.
Second is value. We talked about the $510 per square foot. Buying at that price creates that instant equity buffer we mentioned. If the market dips, you're safe. If it rises, you win big.
Third,
Flexibility. That dual master layout. It protects your investment because the house is a chameleon. If the family rental market dries up, you pivot to the high-income roommate market. You have options your neighbors just don't have.
and the fourth pillar?
Market resilience. Despite all the noise of the data, the detached home market in 92/126 is showing double-digit appreciation. 15% up year over year is not a market in decline, it's a market in high demand.
And that $5,900 rental number it really sticks with me. It feels like proof that the market knows this house is special.
It does, and honestly, I think that's why this property went pending so quickly and why United Home Teams moved on it so fast. That list price was arguably under market value, especially given the income potential.
It's a fascinating look at how you just can't trust the broad averages. You have to get hyper-local.
Always, real estate is local, averages lie, specifics tell the truth.
Before we wrap, I want to leave our listeners with one last thing to chew on. We've talked about Mira Mesa as it is now, but I noticed something in the sold comps. There were mentions of homes in the Three Roots development.
Ah, yes, Three Roots, that is the elephant in the room.
For those who don't know, what is that?
Three Roots is a new, huge master planned community nearby in Sorrento Mesa. It's marketed as a wellness community. It's very high-end, eco-friendly, luxury everything. And the homes there are selling for massive numbers.
So you have this ultra-luxury enclave popping up right next door to traditional Mira Mesa.
Exactly. And what we're likely seeing is a drafting effect. The luxury prices at Three Roots are pulling up the values of the older, larger, renovated homes like Calle Calzada.
That's fascinating. So the expensive new neighbors are making the older neighborhood more valuable.
It forces a question, right? Are we seeing the gentrification of square footage? As Sorrento Mesa becomes a tech hub, these large Mira Mesa homes are no longer just suburban tract houses. They're becoming executive housing for the tech sector.
Because if you can't afford the $2 million new build at Three Roots, you buy the $1.2 million renovated home on Calle Calzada.
Precisely. And that is a trend that could drive prices in this area for the next decade.
That's a really provocative thought. A great reminder that real estate doesn't happen in a vacuum. Well, we're going to leave it there. This was a fantastic deep dive into 8324 Calle Calzada.
A true unicorn and a great win for that client.
Absolutely. It's great to see a plan come together. And remember, this deep analysis of market conditions and listing details is provided by United Home Teams. We are homeownership advisors in San Diego, helping people make confident home decisions, just like the investor who just opened Ice Grow on this property.
If you're looking to navigate this market buying, selling, investing, you need good data and good guidance. You really can't just guess.
You certainly can't. If you have upcoming home projects or if you want to find your own unicorn, you are welcome to contact our team lead, James Yan. You can reach him at 626.226.8695 for a free consultation.
Give him a call. It's definitely worth the chat.
Your dream, your journey, our guidance.